Greetings, good morning. You are speaking to Odinga. I'm coming at you from my trading office, and I want to look at the market today with you. We have just seen, just had 8:30. We had news embargo. That is when the news embargo lift in the U.S. Let me see there. For those that are trading the forex market, the 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 future index and other markets, it is highly recommended that you use the calendars available so that you can know when certain news events will come into play. The algorithm, yes, I am an algorithmic trader. I'm approaching the market with algorithmic concepts, knowing full well, actually, as I have been taught by ICT, that the market is algorithmic driven, and I have proven that through my back testing and journaling. This month, June, I've already opened my seventh. I opened my seventh book for this series of back testing and journaling. What I'm doing is that I'm now in the process of programming an algorithm, my own algorithm, one I hope to use in the future, and I'm sure I will use it in the future to execute trade for me on the smart money level. I am once more from Suriname, it's a Dutch speaking country, and actually from the interior of Suriname. I am a native Surinamese. I actually this disclaimer as for you those that will engage the market. They just like to use the market as a vehicle to invest your money. It is recommended to uh, contact your financial advisor, and if you contact your financial advisor and you have received sound advice, then you go ahead and make your decision. Nothing, no information or content of this channel can be used for any other purpose than education and entertainment. I have conduct a high time frame monthly analysis that was on I think Sunday, was that last Sunday when the market was down. I've recorded it and it is on my channel. Weekly, and I have predict and have also give insight to where I think the market will gravitate to. And this is my book. We are now, that is a daily chart, daily analysis. I want to show a little bit the channel I'm referring to. It is this channel. I am the consistent, profitable, independent thinking trader. If I am not in the office, then I'm outdoor. I'm currently on my laptop recording this test. This, you may say, introduction to my channel. I have been uploading a lot of videos, and I hope this one will be also a successful upload as we are watching the market before the 9:30. 9:30 is equity opening. We just got the news market first and foremost with ICT concepts, and what he taught the model 22 model is that I want to see a stop rate if I'm looking for bearish trade. Then I want to see a stop rate first in the buy side. Buy side, buy side to give me stop rate first, a stop rate, and then like this one, a rally to the news embargo. I want to see price rally to the upside, like this one at the market, rally to the upside, and then displace to take a low, and in the displacement leave a SIBI, sell side imbalance and buy side inefficiency. If that is the case, price give me that that I will drop to the 1 minute chart and engage that SIBI as a point to where I will sell to the liquidity that is beneath these swing lows and so forth. Check the 1 minute chart. We have now seen after 8:20, we have seen and witnessed a rally to the upside that engage the buy side. Maybe still looking at a market maker, not market maker. We may be looking at a model 22, and now we are witnessing either it is the displacement 5 minutes. I like to do my hunting on 5 minutes, or I'm approaching the market with the market maker sell or buy model in mind, or this might be the engage the accumulation phase for smart money to buy in this fair value toward that. Seems most likely to be that. For now, we are not yet entering or engaging the market. We are watching how price is delivering, and we are trying to grasp what the market have done from the midnight opening price till 9:30. Actually, it's from yesterday because we are also recording the opening range gap. Yes, that's it. For now, I'm looking at the hour between news embargo news release and equity opening is where if I'm going to approach the market with the market maker, not the market maker, with the model 22, then I am looking to see within this hour period. I'm trying to see the rally to engage the buy side first, and then the drop. What we now can see, what we have here, we see here a swing low, and there is a high and a high. Looking further back, here we see also a swing low that has been engaged. We may say that this is a dealing range, which you have now a external a swing to the downside in London hour. Those that know about the silver bullet have probably take advantage of it. London have deceived them going up, and then the real move. The characteristic of the kill zones and the concept that I'm using has been explained thoroughly, and I don't think there is somebody other than ICT that can explain the language as best as he does. So that was my first test. What I can say, this is a dealing range, what we are here, what you are seeing, and there is an equilibrium price between this one. This is my discount have rallied and passed fair value. Fair value is fair value, going into what we call the premium side of this range. Now, in this premium side, market does not stay long in premium. They usually drop. What we can reason is that we want to see this swing low taken. This one, there is a swing low, and below this swing low you have. We want to see the swing low taken if this is really the model 2022. Then we want to see the swing low first taken, and in the displacement down, we want to see a city that where we will put our sell limit order, from where we will sell down to this liquidity down here. If that is not the case, and that is the second approach, it is approaching with a market maker buy model in mind, being the original consolidation, the first expansion is reclaim block. This second expansion create a market reversal pattern, low risk buy. The reclaim block has served here one, and then a strong leg to the base of the market maker buy model, being the buy side delivery. This all you can find at my channel. Yes, it is for free. I'm sharing. I'm enjoying this. It is for me an entertainment to join and see how my work after the language, understanding the language from ICT. I have worked hard, take time, a lot of time working in the chart, like just the journaling, just as he told us. And I think now I'm ready, and with this, with the understanding that I have gained and the experience that I have recorded, I'm ready and I'm trading the market. Let me check the Nasdaq. It's the June contract, and we are seeing that also the Nasdaq is rallying, giving a stronger. The Nasdaq already have passed this swing low. If we see this, consider this to be a dealing range, then is this a deep premium overbought situation, and it is going the downside. But it is accumulation to complete the market maker buy model. Here you have the expansion, consolidation, return to base, expansion, first one, reverse, low risk buy. We find low risk buy here, find the low risk buy here, accumulation, and further this. We are looking for price to reach this with speed. If not, it will use the time between 8:30 and 9:30. We are looking for price to take buy side liquidity, and then you see down buy side liquidity above these highs, and then displace below, displace to take a swing low. And in this case, I can check the 1 minute chart. Displace to take out a swing low, and in the displacement down, we want to see a SIBI above the 50% of the displacement leg. If we see that SIBI, we will engage it, have a stop loss right here, and then we trade to the sell side, the bearish target. For now, we are not in haste to take no trade. I'm just in this case testing the DeFi side just to do recording, and then also I've since today decided to do presentation in English. I'm from Suriname, and in Suriname we mainly use the Dutch language and what we call the Tomo and other languages. But I decided to use the English language just to facilitate a larger community and reach a larger group. In case there are Surinamese people that would like to trade with me, then there's room for them to reach out to me, and then I will do it in Dutch or the language they require. But for now, I'm going to be presenting, making a lot of mistakes. So it's not my native language, but I'm going to present in English. We also use the Dow Jones Industrial to check the SMT, the Smart Money Tool. It's just a confirmation tool. It's a barometer. Dow Jones, yeah. Dow Jones has created, in this case, a higher high from 8 o'clock to 9 o'clock. The Nasdaq have also from 8 o'clock we see to 9 o'clock we see a high but lower than that of the Dow Jones and the ES, and the joint contract of the ES. The sisters already, actually the decision is clear that this is a run to this target. I will not take this trade. I'm just going to see it. I'm tape reading its run to this because of what I just saw in the SMT, 8 o'clock till 9 o'clock. Because again, all the sisters are in tandem, so I'm looking for them to expand higher using this leg as what you can call second stage delivery of this market maker model. We are not in haste to take early trades. We just want to watch the market and check what it do. This is the tape reading. You don't have any monetary, any finance in play. No, nothing. You don't lose nothing. You just read the tape, what you think the price will do. You try to read the market and try to feel the market where it is going to. I check the daily chart. Yesterday I was a little bit tired and I did not do what we call the daily review, but I can quickly go through it. We now see this. Yesterday candle was a down close with a long wick. What I always do is that I grade that wick in quarters. Half of it is this one. 50% is consequential encouragement of this wick. Then you have the 25 of a quarter of that wick. 25% of a quarter. From the daily charts, we are trying to find the narrative and trying to find the real draw of today. We have marked these charts. We are in a daily excuse me, telling me this quarter. Yes, we are in a daily SIBI and a volume imbalance. We have traded through it yesterday and now are going up. We mark this let me my straight line, but the quarter portion of this long, the lower quarter of this long tail, yesterday tail, and we want to look at what price will do trading level, what it will do with this volume imbalance on the daily level. For me, we already have rebalanced this BC, so I want to see and check what price will do. Let me check the dollar index. We have now the dollar going up, daily going up, and if the dollar going up, the other assets mark to market, is it for the forex trader, is it mark to market? You have the dollar go up, fiber, which is euro USD, and cable GBP, London pound GBP USD, and the other pairs that end with USD, they will go down. That is with risk off. In this case, risk off with the US dollar index. The future index market are allowed or permitted to go down, so I can permitted to go down, they are going down. So having that as a backdrop, that for now we are seeing the dollar going up, we'll be looking at how the market, if there is reason for the market to go down, permitted to go down. The reason is that we have the risk off scenario, dollar going up, all other markets are going down, FX mark to market, and mark to market, and stock index and future index are allowed to go or permitted to go down. So I'm looking at, because that was the analysis from Sunday, my high time frame analysis. I'm looking at this volume imbalance, this volume imbalance to be used as inversion and trade to this what we call this equilibrium price. There is on the weekly chart, 1 week, a dealing range, and I'm expecting them to deal in this range. Depending on how we trade here, I'm going to be looking for price to drop to this dealing range. If not today, with maybe with FOMC or with non-farm payroll, I'm just going to be hunting their price from the weekly perspective. If not this week, then the week that is coming. Or we had analyzed that because of this long tail into this weekly busy, this might be just accumulation for another leg up. How far that is going to go, maybe to this last month, 2 months ago high. That is it. I'm going to go to the 60-minute. I am not using the 4 hour. Let me stop the 4 hour. I'm using the 4 hour. If the daily chart is not clear where we are going, then I'm using the 4 hour. But if it is clear, I'm just go straight to the 1 hour. We have now traded to the upper level of the tail yesterday. a tail. We had four lines: a consequential encouragement and an and a. Let me give them a darker color. If I give this, if I give them a darker color, give them this, and I make this darker. Yes, I give them. Yes, this is the consequential encouragement. I make it darker, and then this is the last part of it. I make it darker. I just give it the tail yesterday, long tail, and the gradient level of it. I make the color darker, and then we go back to the 60-minute to see that we have now trade two that we are trying to the upper level of that tail from yesterday. And what I do at the 60-minute is I'm looking at obvious high and obvious draw of liquidity. In this case, above this you have draw on liquidity. It is obvious price is going to go there, depending on how it is a SIBI. It's obvious draw on liquidity. Price go only up for two things. They're going up for liquidity, above marketplace or below marketplace, or they go up for liquidity above marketplace and inefficiency, and or they go down for liquidity below marketplace or inefficiency. And then you may, I want to reason like how I do my analysis. Where are we now? Where did we come from? We come from actually this order block, strong run, order blockade, a strong run, and then expanding. So with this in mind, I'm going to approach the from the opening. I want to see price drop and take first, with the opening price, take first a short-term low, expand higher with maybe displacement, and then in the displacement leave a busy, and then I will trade that busy into these obvious liquidity. That is my approach going forward from 9:30. 15-minute chart. The 15-minute chart is giving us also reason to go up here. There is too smooth high above here, and the market like to make jagged smooth high. First, this draw on liquidity I will be focusing at, and then the draw above these relative equal highs. This is the 5-minute, is where I am normally doing the hunting, and price is actually going there, but I'm just waiting for the SIBI to be left. The drop into this SIBI is clear. It's a legit drop into this SIBI. There is an order block there used also, bullish order block. At 9:30, I want to see price first drop to this to the sell side, and then from it rally toward the draw that we have fixed from our higher time frame on. For now, this is a small short version of my daily review, and actually we are looking at the market maker buy model, so I'm expecting price to rally toward the buy side. That is the analysis and the approach of the market, and I'm going to be reading the tape until this idea is negated. But for now, I'm keeping this as the idea of how I am going to approach my trading this morning. We are not in a hurry to trade. After the market open at 9:30, we wait until 10 minutes after whenever the AM silver bullet time window start at 10. We wait until we see the the first macro, the first significant macro, that is 10 to 10. I wait until that macro is done, then I am going to engage the market. We are not afraid to see the market run without us. So this is macro 1. What is a macro? A macro is a small algorithmic, it's a small program, small algorithm that is being used to send price to a certain high to engage liquidity, or drop a price to a inefficiency so that it can run. And I'm just waiting for the macro, this 10 to 10 macro. After opening, I get my opening range gap done. I want to wait to see what we will do with this what we will do with the opening range gap, and then how price will the landscape of price action will be at that moment. Welcome. This is my first recording. I'm now thinking about recording not with video, but recording just with sound. With video it is good, so that you can see the facial expression of the trader. The mentor always talked about the sentiment reading of the trader. A mature trader is desensitized to the price fluctuation, has seen a lot of example, and also know that his model will deliver and will come to him whenever the time arrives. So there is no hurry, no hasty, no. I like following a lady. Her name is Tanya Trade. She's one of my. I'm following her, and I like the calmness that she displays, because that's exactly what a professional, mature trader will be doing. They are not hasty, not cussing, just doing a boring job. But a mentor always says it's a boring work. You have worked a lot in the market to see that this is a boring job. Experience. Smart money buys in the dips and they sell in the rallies. It's a general rule that I'm keeping for when to buy. I only buy in black candle. In this my down close candle are black. I'm only buying in black candles and selling in a green candle. For now, there is not really significant then that we are watching a potential, not potential, the leg of this this market maker buy model to be completed. This is now where buy side liquidity is. Buy side liquidity. Where buy side liquidity is for now. top and left. Buy side liquidity is there. Smart money will expand quickly, indeed quickly, with large candle. I want to see what will happen at the opening, and then I will decide what to do. Oh, this is a strange retracement, deep discount. Deep discount, deep premium. We might see a sell for now. Watching. Let us see what will happen at the opening. This is my office space. A humble one. A humble one. Yes, a humble office space. And the London have most very well. What we are also watching in a week like this is the Friday non-farm payroll is an event that the banks, the market makers like to use to clean the table, to usher in manual intervention. Trading from Monday till the event that is on Friday, we must be thinking in how the market maker is going to prime, going to get the street money thinking in a certain way. So that is also what I'm looking. They are priming us. They might be getting us in a way of thinking, so that they can rip them off, or trap them, or stop them out with the volatility that come with non-farm payroll, with very most likely very strong volatility, very strong manipulation. We don't trade on high impact news such as that. We just allow the market and let the market to trade, and then after non-farm payroll, then we engage. I have somewhere on my channel have stated how we learn, how we become an informed thinking trader. We take lessons from lectures. We commit to follow the channel that Mr. Huddleston, that is ICT, he taught us algorithmic language. He give his stuff, he make his stuff available. That is number one. We commit to work in the chart, backtesting, journaling, recording old experience, and then after that we tape read. That is why I am actually doing this. I'm now in my tape read phase, where I am in my mind's eye seeing where, thinking about where price will go, putting a mind and a trade, and then after that you can do also demo trade, aiming at 70 to 80% consistency. And if you have that, then by that time you may be boring in a boring state of mind, and then you are ready to actually trade live. Before that, it is not recommended. It is not recommended for you to take trade. What I want to see, if it is a buy model, I want to see at the opening the market drop aggressively to the sell side at the opening, giving me, if it is the buy model, to take these highs. I want to see at this opening a strong drop, giving the and it would be in this case accumulation for a strong distribution again. But I want to see a strong drop. Take these buy side trade into the bullish order block that we are seeing here, and then if it takes certain swing low and leave a SIBI, I will trade to the sell side. But if not, I will trust to complete the buy side delivery of the market, the second stage delivery. The market just opened, and we are watching it. Just running straight to complete the buy side delivery of the market makers sell model, buy model. Between the open and 10 o'clock, we do not trade. We just sit and watch the price. We define the open range gap from the 1 minute chart. The 1 minute chart, there we see the opening, a strong opening up. We go to regular trading hour. Do not forget to have your time on New York UTC -4 from my location, and then we go on regular trading hour, where we see the gap between yesterday trading that was here and today's trading. There are two ways to mark that. Yesterday was that we have open actually in discount here. Price will go to engage first this liquidity. It is a gap theory. Even if we are not trading it for today, opening range gap will first go to engage these obvious liquidity, and then will rally to at least the equilibrium of the opening range gap. Opening range gap from yesterday was 3 till yesterday. What we want to see, and that is gap theory. We want to see price drop to engage first these liquidity. This liquidity the algorithm is seeing, and when it take this liquidity, then we will be sure to yesterday PM low, AM yesterday PM low, 5 minutes. Yesterday PM, PM high. Opening, I look at which is approximate. PM session high. That is some previous day PM session high. PM 3, 6. We are not in a hurry. We just are watching price painting out. We are tape reading between trades. Even before we engage, we are just tape reading, trying to read what the market has done and is doing before we take a trade. This is the PM. This is the yesterday previous day PM low. We want a relative to the distance between from here to there, I first want to see price drop down, and during this opening range period, previous day, PM, I want first this bottom. I want to see first price drop down to engage the liquidity that is here, and then see price then return to take the liquidity that is up there. That's how we define the PM. Some use the Fibonacci extension to mark this and then grade at the level. I'm just using a rectangular just to and have it on my chart, and then I'll go back on electronic trading hours. Here we have already the PM low has been engaged during London. It is very nice, so it has already been engaged. There's no reason for price to drop to engage it again. This drop is accumulation. It like I just told you, we want to see price drop, deceiving them, trapping traders that we are going there, and then return to and complete the market maker by model toward the obvious draw that we have put for each other. Actually, I will engage when it create that if it pass this one, this inversion very good. If it pass it, then use it as inversion. It is so busy, but I will use it as inversion very good. If price trade past that one and return to it, I will buy it to this liquidity 1 unit, and then focusing on the PM, previous day PM session high. What we are expecting price to at least reach this middle of the game. Now they have reached that. If price trade down to this, I want to use this as how we call it, as inversion variable. I hope to see price close above it, and when price close above it, this is a very familiar pattern we are looking at here. This trigger that bearish order, but if it close, I will take a buy and then sell it to the buy to the first profit will be this, and then second profit will be the high of it. I want to see price close right here, somewhere here. The open, the drop, yes, the drop, open. It already triggered this order block. Somewhere here, I want to see it close. And then if it close right here, somewhere here, and it open and drop to this consequential encouragement, I will take the buy, and then I will aim at the middle point of this, what we call consequential encouragement of this opening range. Normally we don't trade the rush. This is rush hour. We don't trade it. We don't trade this opening range. Opening ranges between 9:30 and 10 o'clock. We don't trade it. It's all because it is a lot of rush and volatility and so on and so on. But when I see a setup as clear as that, I just wait for it to meet my parameter. What is that? I'm in a big market maker buy model, buy side delivery context framework. We see with the opening we have seen manipulation, and then this is accumulation. Here is where smart money buy, and I don't buy there. I just wait for it to close. We already have triggered this. We can take it. I just wait for it to close just near this candle. When it open, it drop. The moment it drop, I will let me have my buy order ready. I will take one trade and we'll have them there. Yes. And we'll have my stop loss. Actually, when I take this trade here, I want to see him close. There is it. I buy it. And when I buy it and I expect this run, I have my stop loss below the consequential encouragement of this wick. And then we can expect price to rally further. Price will not drop to below the consequential encouragement anymore. You don't have to be afraid. This is middle point of the wick. This is where it can go at best, and we are expecting price to really shoot up to the buy side. I can trim my stop loss to, this is 25%. I'm okay. You don't have to do nothing else. Just leave it and watch price delivery algorithm. The other thing is that we are not afraid to take a loss, so a drop as that doesn't scare us. We know we are in the model. We have our stop loss in place. We are looking at this manipulation. This is a very familiar pattern you will be seeing with me a lot of time, and price will rally very strong. Don't wanting them meaning other street money to get involved with this run. This is a strong bullish run toward the buy side, taking this buy side first, and I'm expecting it to reach the previous day PM session. Let me go and get my, I think where is my, yes, and I will be taking profit just before this just before we reach the PM session high for yesterday. So all we do now is that we are looking for signature for information in the chart to talk to us, to give us the information. Actually, we need to trim stop loss, because we are now with one mini contract. We will be using stop loss to bank as we go. This is algorithmic, and you just have to be very calm, patient. Watching is the hard part of trading. Be patient and wait to see price going to the expected drop. At least where it will go. This is the middle point of the opening range gap, consequential encouragement of that gap. For those that are taking trade, that are actually taking trade, I can with this drop add more contract to the trade, and I actually am going to do that so that I can take profit. First profit there I am. Okay. I don't buy in green candle which are up close. I buy only in down close candle. So if I see another drop a black candle painting, then I will add another contract to this trade, and then I can take my first profit at the consequential encouragement of that drop I wanted to see. Then I buy another contract. I just put two contracts inside the trade, and I'm going to take the first profit right here. First profit at the consequential encouragement of this. I want to take it. Give me yes. Sell limit must be sell minute 1. When we reach there, I want to take my first partial profit, and then this one I want to adjust it to trade to and through it. So in the meantime, we are just waiting to see how price will deliver according to the algorithm. That is the first one. By this time, we are looking at this tail. We are looking at this tail, and if price respect the middle point of this tail, then we might be sure we are definitely on side. If not, we can still waiting for confirmation. But I think we are seeing the second stage of the second stage of what we call this thing. The second stage of delivery, which is a quick and strong delivery, as we are now seeing. I'm not taking my profit there. My profit is actually full profit there. When my first one is taken, I bring the trade into what I call the state of no risk. Don't mind what you are seeing. Just be calm to see this high is not yet been taken. So we are expecting price to go further up. This is the second stage of the distribution of a market maker buy model. When we take this first take profit, it will be half of what you are seeing here. I will reduce my stop loss to no risk. In the meantime, you just exercise patience. Don't worry. Remember, I told you about this consequential encouragement. This consequential encouragement, we like to see price respected. That consequential encouragement, even if it will drop, it might drop. It gives us a red number. That doesn't really matter. Watch the P&L plan. We want to see price respect this to be actually 100% sure we are on side in the trade. How do I know we are not going to we are still going up, even if it's going to drop this side? Price has trade and have not taken this swing high. It's just, if it close here, it will just be another relative equal high, and I'm trusting the model. That is how I mean. And how do I trust? Come to trust a model and have the ease that is needed to trade and have trust a model. We do that when we have taken the education, the knowledge from ICT. We learn this thing from him. He is our teacher, and we go to the chart and work with the chart. Work at the chart, and so here is where he always take profit, pay the trader. I like to see full run up, because I'm enjoying a tool. I will just pull it up in a minute to show you this tool. Look, I'm enjoying this magic tool. So I think TradingView has recently added this tool, a celebration tool. We'll just take this, but not strong enough to give us concern to panic and close the trade. We are seeing the delivery of a market maker buy model, the buy side delivery. So be patient. I'm hiding my celebration tool in meanwhile, and I'm watching to see price going to where we expect it to Remember, the consequential encouragement of this tail is very important to see. We want to see price close above this consequential encouragement, then we are definitely on side. Yes, how you come to trust a model? You go to ICT, you take the course. Yes, he is providing us with a course, the language, the understanding of algorithmic language, and then you go to the chart and work hard. Never give up, even if you're losing trade. Do not give up. Work hard, studying. There we have it. We have now the price stop right above this tail. We are on side. It's just going to drop to make this one efficiency. And then we will run to the target. This order block. I like that tool I just told you, but it's not yet time to celebrate. So actually, it was not a meaningful celebration. I want to see my first target hit. I will reduce then my stop to just above this entry, just above that. After we take the course, we work hard in the chart, backtesting, gathering data. Gathering data. What else? Backtesting, gathering data. What else? And tape reading, like a session like this, seeing somebody doing it that is before you, that is able to execute better than you. There are a lot of better traders than out there. Then you trust the model by that. So there is no panic, there is no emotion in how you trade. I like to see it going up. So anytime it drops down, I'm just looking for the information like this. He's dropping to a order block, which smart one can use to just buy, put more buy order inside of the trade. For now, we are waiting on the sideline with my new celebrated tool, and I will use it as we take first profit. First profit will be taken, and then I'll reduce my stop loss to actually no risk for the trade, and then I'll watch how further we can come. We think price will rise to this PM session, not just to the PM session, but trade to and through it. That is the concept. We don't just trade to it, we trade to and through it. For now, we just watch price going up and down, up and down. It's a price fluctuation, and we are not bothered by that. We know we are on side, we trust the trade. So we wait and see if the chart gives us data that it still wants to go up. It still wants to do what we think it is going to. Not the profit and loss. Actually, if I have something to close that, I would like to do this. Just to look at the chart and see what data the chart is giving. This drop, make this order block inefficiency efficient, and drop to this bullish order block, and we are expecting the expansion to the upside. Another thing of trading is that we are not afraid to take a loss. So even if it turns against us, one loss is just what we call a transaction. It's just a transaction. This, we don't want to see it trade past this one, so I can trim my loss just above that, just below that two tick below it, and that is where I have my stop loss for now for the two trades. it won't violate this consequential encouragement. So don't look at the profit and loss scale, just focus on what the market is giving you to trade. The information, it is speaking to you. The mean threshold of this order block is just I don't want my celebration tool to be used yet. It is the mean threshold of this order block is just above the consequential encouragement of this. So our stop loss is okay. We are on side. The logic is good. The model is in play. So we expect our targets to be reached. Yeah, all we have to do is look, sit, be patient, not a good posture, be patient, and then see the market delivering according to actually our. We are now in 10 minutes to 10. The macro number 1 has been dropped. I think they will use macro to complete the run. You have 5 minutes to 5. There is no inefficiency down here that I think they want to reach to. If not, no, I don't see it. If that is the case, then it will be that price is going to go to the downside according to the daily analysis. Understand the daily analysis that we had, thinking about the daily analysis. Take of this. We are not afraid of this drop, because this is where we have put for price to not trade too impassive in closing basis. We respect that. That is our trade. It has trade to it, but on closing basis it cannot close below it for us to stay on site. If it take it, we have just gained more information that this swing low will be taken with displacement, and then in the displacement leg, that is a beautiful run, and then in displacement leg we will see a CB, and then we'll trade to these targets. So either side, this is a great day trading. It's our first trade. It's still looking at the trade. I like to see this on closing basis, this not be violated, and I like to see price stay above this swing low. So I have my stop loss there. I can put the 3 ticks below that. Not so much. I don't want, yeah, the 3 ticks below, because here you have a consequential encouragement of here you have a consequential encouragement of a CB, which is very important price level. So I just want to be below that consequential encouragement. We are still on spot. I just did stop loss management. When we take a loss, like if we take a loss and we are not out until our stop loss is hit, right? So when we take a loss, like if we take a loss, I don't think so we are on spot. On closing basis, we want to see the chart, the price action be above this. It would be nice to be above the main threshold of this order block on closing basis. This what we call the heat of the trade, is when it go against you. You feel like you are on the wrong side. Just continue to manage stock according to the principles of what you have taught and trust the model. I believe that if we close above this, I want to see where we close above this, with this drop, that we are going up. If not, the daily chart is giving us an insight that we probably might go further to the liquidity on the liquidity, how we call it, the equilibrium of the daily, the weekly dealing range. So all checking if the market is giving you information. So better to close that. You don't look at the price. Is the market giving me information that it want to go to the target? And then you wait, patient, wait, exercise patient. You see, when you are in buy, you do not want to see a black candle because that is selling. But it is in these candles the market makers take their buy. If they are on spot and really like what we have just said, we are going to complete the buy side. Wow, can I celebrate? They haven't give me room to celebrate. Wow, that is it. I want to celebrate it. The run. I want to celebrate the run, the second run to my target. I told you that I wanted to take I wanted to take the risk out of the trade, and it is what I just did. I cover loss, and actually I can close this trade, but I leave it. I just cover loss, and I want to see price further going to this side. I want to cover loss, yes, till here is enough. Meaning I don't want to see price drop further past this. Further, I want to see it take a run from here and reach that PM yesterday surface. If we are close out, we will be close out in profit. This is how the algorithm reprice to target. Let me cover loss until here. Meaning I don't want to see it past that swing low and only a mohawk before it reach our target. Giving it only a mohawk before it reach our second target. We are on target, and there is where we are running. And you can celebrate because this is where it is going. You can take more. We bank as we go. This is what we call we bank as we go. You cover your space. More and more your space, and if it takes us out right here, you don't mind. You have already banked as we go. What we expected to reach this draw on liquidity, and the draw on liquidity is about there. If it takes us out, we are happy with the trade, and we are out with $500. If not, we will celebrate the full run. It seems to be like that. If not, we don't mind. We already algorithmic see the delivery, and I think I've trimmed the stop loss too tight, but don't mind, I don't remove my stop loss after I trim it. I could have put the stop loss right here. It have taken us out, and then we'll run to that. We'll just read it further. We will not make haste to go into another trade. That was the only one trade for today. I just want to complete this run above this PM session high, and then we'll close the recording. Thanks for having been here. Yes, I believe like ICT is teaching that we are the market is algorithmic delivered. It is an algorithm that delivers price. The best thing is when you make your money, you get your profit, you make your money, is that you come out of the market. Don't stay in it. Come out of it, and then later in the afternoon you can tape with this move and record some more experience. The reason we are still here is that we wanted the second. We want this target to hit before we close. Either way, I would have been stopped out. No, not yet. Not yet. Okay. Not yet. I'm looking for this low. Or remember, this is the non-farm payroll. Okay, this is inversion fair value get dropped, and we think we'll go. Okay, I would have been stopped out. This is a too long way to not consider. If you are trading further, you need to consider it. And I am actually done for today. I am going to go to this is my personal account. We have just saw a new spike. This is till 11 o'clock. They use that news at 10 o'clock, 11 o'clock, job opening. Okay, good. Thank you for watching. Join my channel where I'm gonna loading up this record in about an hour. I don't edit. I am thinking that for the coming for the future trading, I'm going to do only sound audio because of just audio, because I think this is standing in the place and I want to focus on the judge instead of looking at myself. This was introduction. Thanks. Don't give up. Keep on trading and keep on working at yourself. We take our bike already. We don't mind.